Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar, and I already pulled up the bias chart. And, I got a question, from Craig, and I want to address it. So Craig asked, well, hey, if you're looking at possible dollar weakness, why are you long the dollar Canadian? And actually, I can add further to that. Why am I long the dollar peso? Because I'm actually, short the U.S. dollar Japanese yen, but I'm still long the dollar on some of the crosses. The reason why I'm long the dollar Canadian is not, it really isn't a dollar trade. Okay, it's more of a crude oil trade. I believe crude oil has peaked. Okay, so let me make sure I make myself clear here. It's peaked for now. So if you take crude and you look at the May contracts, which would be the K contracts here. All right, if you look at crude and what happened on Friday, which, I wasn't looking at it, but, now I have a good understanding of exactly why, I can be on the short side of the dollar, or excuse me, on the Canadian dollar right now. There's a couple things. So, you have this crude, the rejected here, okay? And then if you look at the dollar Canadian, so a few things technically that we hit the 618, and the 618, it's the last time we had a lower low, which on there's actually a couple lower lows here. There's a lower low here on the daily that we almost matched, almost, really close to. We have the other lower low on a weekly basis, okay, lower low here, there's a lower low here, and there's a lower low here. Those are the three places you drop fibs from. So we almost had 100% retracement. We're at a 618 here, and then if you looked at this lower low, we're in between fibs, I believe. Yeah, I mean the 38% retracement comes in, slightly higher. Okay, but you have a 618 that's right there. Here, let's get rid of this one. I don't need that for now. Okay, and a 618, and also the as Joe pointed out, the monthly breakout points from 2008, 2009, monthly, weekly, and when the breakout points are right here, and you go, okay, well that was basically 130, right? Here, let's zoom this back out. I'll go back more detailed in the Canadian. I just want to address this from Craig, who's asking. The high here is 130.64. We're at 130.64, ironically, but we dipped slightly below that. When you're looking at monthly and weekly, support or resistance, for us to get, 100 pips below a monthly support or resistance, or 150 pips for that matter, and bounce back, that means we're holding. I mean, yes, we were 100 pips below it. Who cares? It's on a monthly and weekly basis, especially when you're talking about massive amounts of volatility. We're going to overshoot, The thing that's going to be pretty damn bullish, in my opinion, is if we close like the week, or let's say we close the month, which would be even more important. Okay, like let's do this here. I'm going to delete. You know what I'm going to do? Bear with me, because we can draw all this crap again. It's so slow today. I don't mind doing a lot of redrawing. Okay, so we have this big cup and handle, right? You guys know I'm a big Canadian cup and handle fan, meaning that I'm looking at this cup. I've blogged about it a lot. Handle. My target eventually is going to be 155, 156, 150 something. Okay. All right. Eventuality. All right. Now here we are. Made a big, stab higher. There's a bunch of reasons why we were rejected there. Overshot the 127% extension. There's a 786 retracement. We hit. So a lot of overshoots, but that's all right. There's massive amounts of volatility. We're on a monthly chart, right? Let's do that. Okay. We can close this month. Like let's say I'm gonna throw this out there. Let's say we get to 132 next week. 132-ish. Yeah. 131.50, 132.50, I don't care, somewhere. You know what that's going to be? That's going to end up being a false breakdown on a monthly chart, all right? Relative strength is getting close to 50 again on a monthly basis. That really allows for the dollar Canadian to do a reset on a monthly basis and start, grinding its way back up. So I'm long the dollar against the Canadian, and it's more based on crude. All right. If crude oil stops here and, like, let's say crude starts to come down, which, we have crude oil inventories today. So we'll see what happens a little bit later today. But if crude can start pulling back and gets back below 40, I think the argument for a dollar Canadian higher from here is good. And it doesn't. And if you're like, well, I don't want to trade the dollar on the long side, I'm a little scared of the dollar. Fine, go buy the euro Canadian, go buy the pound Canadian, but trade the Canadian yen on the short side. Do something else. There's plenty of things you can do with the Canadian currency that doesn't involve with the dollar. Which I think are all viable trades. Same thing with the peso, by the way. The peso, just so you all know, it's on trendline support, daily, weekly, monthly trendline support here, and this is more of a risk aversion play. I think the stock market is within 10 to 30 points of hitting highs. It's obviously not rolling over yet, but I think it's very close. The stock market is very close to rolling over and showing some signs of weakness. When that happens, the U.S. dollar Mexican peso is going to bounce, regardless. Doesn't matter what the rest of the dollar complex is doing. Now, if you really, again, you don't want to play the U.S. dollar Mexican peso, fine, buy the euro peso, because the euro peso is probably one of the best risk barometers out there. So let me say that again. If you're like, well, Blake, I don't want to play the dollar, so be it. Okay, here's the euro Mexican peso, here's the S&P, and you can see they're mirror images of each other. So if you think the stock market's done here going higher, which is the blue, right? If you think the stock market's going to roll over, buy the euro Mexican peso. If you don't want dollar exposure, two ways to play it. Couple, there's, again, you don't have to. I can't trade the euro peso. It's not in my set of pairs I can trade. But the way I'm going to capitalize on that is being long the U.S. dollar Mexican peso, because the U.S. dollar Mexican peso is on really what I feel is very strong trendline support, and I know below 1720 I'm wrong. As a trader, there's not a whole lot you have control over. Actually, there's very little you have control over. Well, and I'm going to ask you guys this question, then we're going to get into our analysis. I know it's kind of slow, so I can show you some of these things, and we can spend our sweet ass time going through all these charts. But what is the only thing? Well, there's a few things, but what is the most important thing that you have control over? Because you don't have control over much as a trader. What is the most important thing you have control over? Risk. And yourself. Yeah, which is tough, challenging for a lot of people. But yeah, you can control your risk. I mean, I can put in a stop in, and obviously we can get blown past a stop, but for the most part, the only thing you got control over is your risk. So as long as you can, like, I can look at the peso and say below 1720, I'm wrong, right? If I'm wrong here, at 1720, and I risk, let's just say in this case, I risk a couple thousand pips, or a couple hundred pips from 17, where I'm long. I'm long at 17. I'm long actually right here. 1736 is where I'm long, so I'm down like 100 pips or whatever. If I'm risking 200 pips, or actually, if it goes down to 1736, it'd be down to 2,000 pips. But in the peso, it's risking 2,000 pips to make. If we break above 1760, but I'm more looking at a move back above 18, I'm risking 2,000 pips to make the 7,000, okay, up here or more. If I get really lucky and risk appetite falls through the floor, the U.S. dollar Mexican peso is going up to 1840 or 50, where I'm going to be happily looking to short, by the way. The better trade, I think, is shorting up here. But being long right here, you're risking 1 to make 4, maybe 6, risking $1 to make $4 or $6. You can't ask for anything better than that. Could I be wrong? Sure, absolutely. You know, I could very easily lose $1 while I'm trying to make 4 or 6. But you know, it's set. You know what I mean? It's set. I know I'm going to be know I'm going to be wrong half the time. If it's a really good market and I'm hot, I'll be wrong 40% of the time, maybe 35% of the time. If I'm really on, and if I'm really off, I might be wrong 40%, or I might be wrong 60% of the time. Who cares? If I'm risking 1 to make 4 on every trade, even if I'm wrong 60% of the time, I'm going to come out ahead. It's going to be frustrating, but I'm still going to come out ahead. All right? Does that make sense? Are we clear on this? Everybody? Yes, no, maybe so? Okay. Good. All right. Let's continue on. Let's start with our analysis now. Now you and Craig. By the way, Craig's in our chat room, and he's relatively new, but I love his interaction. He's in there all the time chatting, and it's great. And so thanks, Craig, for asking that. So let's get into the charts now. We're gonna get into speaking of risk. All right. So yesterday we talked about the euro dollar. Where's support? Support's at the 618. That's why I have this red line drawn here from yesterday. It's going to stay there. Okay, I'm going to leave it. Paul thinks we can get down a little bit lower, maybe to 1142. I think it's possible. I don't want to disregard that, because if you're looking at, this is the ECB move, this is the FOMC move. You know, if you're looking at like a 3 drive type of move here, this very much looks like this. You know, follow me if you can. 1, 2. The 3rd drive may be a little bit less, but that's what it looks like to me. Okay? All right. Now, does that mean we're going to get that? No, not necessarily, but I believe that somewhere down here or here is going to offer an opportunity to be on the long side, whether it is at the 618 or it's the 38% retracement of this move, okay, or the 618 of this move, okay? Okay, either or, you're going to get some sort of reaction down here. Now, we may have gotten it. I mean, this may be it, because you know, if you think about if you're short the euro dollar, let's just say you're short, okay, and you're like, okay, I keep fading on these spikes, getting a little bit of a gain, and then I get another spike up and getting a little bit of this gain. You know, buyers know that when you start approaching these key fibs, they're going to start buying ahead of them. You know, because it's the me before you mentality, right? Okay, if I know there's strong support at 111.70, I'm going to put my bid at 111.71 because I want to make sure I buy it before you buy it. Then you're going to have the other guy that says, well, I know there's people looking at 1170, you know, they're 1168, they're going to be buying down there. Then the smart guys are going to be putting it at 1171. I'm going to be smarter than them. I'm going to put my bid at 1174. Then you got the next guy or gal, you know, says, well, I'm going to be smarter than all these people because I see that people are going to be buying 1168. Then there's going to be people that think they're really smart. They're going to put their bid at 1171. Then the people think they're smarter than that, it's going to put in their bids at 1174. I'm going to put in my bid at 1177. So what happens is you end up getting tons of bids, and coming in through here, layering up. So as you know, as price comes down, it runs into a shit ton of bids because everybody's sitting here trying to bid it ahead of this, fib. That's why you get this, you're falling, and all of a sudden you get this, we stop, and then we start to turn because you got a bunch of bids holding up the market. All right. So right now, my assumption is, people that have been trying to short the euro into the spike are probably looking at support coming in really soon, whether it's at that 1140 or whether it's 1170. All right. So right now, let's go back over to here. I think the euro dollar bids are going to be, or the support's going to be 11170. We get below that. I mean, you could put in, I'll type it out, 11140. But I think 11170 is going to offer, support. I don't even know if we're going to make it down to 1140. But, we'll draw it just because this is an hourly channel. Can't ignore that. It's very, very, very well defined, right? So what's to say that we can't stop, we can't drop to that, you know, final low at the 38% retracement of the FOMC and ECB move? We can very easily. Okay, so can't rule that out. What I can tell you is a move above 112, like this resistance right here. Let's get rid of it, not get rid of the fibs, but here, let me take this red line. I can use this over here. A move above 112.25, that would be very clear to me that we have now broken out of this channel. So when you're talking about like a 3-drive move, I already did the 1 drive over there. You got this one. Then if we start doing another move like that, once we get above this resistance here, that's clear to me that we've now broken out of that, channel, the down channel. We're probably going to be targeting at least 1250, maybe 113. Okay, so resistance for today is right there. Resistance for today is at 112.25. Okay, bias is it's a range. I know it's as frustrating as it is. As frustrating as it is, we are in a big, fat, juicy, nasty range, and it's ugly. That blue line right there is going to be vitally important, on the way back up, I think. Okay. Coffee is good. Very good. One of the things. So I'm going to be in northern Arizona for the weekend. Now, one of the things I love is being up in the cabin and having really, really dark coffee, real flavorful coffee when it's cold, and going outside and on the patio in the morning, seeing the sunrise, being really chilly outside, like sweatshirt, throw a blanket on over you chilly, and having a warm cup of coffee and watching the sunrise. Oh, it's fantastic. I'm very excited about doing that Friday morning. Okay. Dave says, I think our idea of cold may be slightly different. Yeah, like your idea of cold, Dave, might be, you're like, oh my God, when I think of cold, I'm thinking about 10 below. Yeah, when I think of cold, I'm thinking like 65 degrees. That's cold. Like, where I actually have to put on socks, that's cold to me. And Chad says, did you just write a Folgers commercial? Pretty much. What's it sound like one, didn't it? Okay, let's continue on. See, we can have fun. We can have fun on this hump day, Wednesday hump day. All right, here's the cable. Cable's trading super heavy, right? Very, very heavy. What to do with it? I don't even know what to do with it at this point. It's nasty looking charts here. Okay, so this trend line, I think I drew this out yesterday. Let's see if we did touch. Here's the thing. You guys want to go along the cable? You're looking for something to do? Speaking of defined risk, there it is. Below 1430, I bet that's an 88% retracement too. Nope, 786, 1152, right there. Okay, so below the 141, let's just call it 141.30, there's your risk. If you want to go long, I'm not, but if you want to, I mean, hell, maybe I will. Well, we're at 141.80. If you want to, I'm not going to. I'm just saying if you want to, this is probably not a bad place to be on the long side. Okay? Now, you may be thinking, well, all the Brexit fears and yada, yada, yada. Yeah, I mean, if you don't want to do that, I get it. That's the whole reason why I don't want to be along the pound. I tried playing the pound Aussie yesterday and it bit me. So, I'm not going to trade for the sake of trading, but for those of you that are looking to trade, 141.30, it's trendline support. It's not great support, but it is support. Let me check something else too. I mean, we have a 50% retracement we're on right now. I'm going to just say that's support for today. Now, resistance, what the better trade is going to be, in my opinion, letting the sucker bounce and then selling it into strength. That's probably the better trade. If you can get some short off, not today, but maybe tomorrow, because I doubt we're going to see 143.50 today. But that's what I would be thinking. Let's see, where's resistance? Where's the downside pressure get taken off this thing? At what point? I am tired. You're going to have to excuse me for yawning. I'm really, really tired today. It's bad when your eyes burn when you wake up. That's the kind of morning I'm having. Got to bed way too late. From here we start making higher highs, right? That comes in at 142.30. It takes the downside pressure off. I don't think this is great resistance. I'm just noting it just because, like I said, it takes the downside pressure off. That's it. We are in a range. It's pretty gross range we're developing down here, but hey, the flip side is if you guys are looking at this, you never know with the cable. I mean, right now people are talking Brexit, right? But what if we spend the next 2 weeks developing a right shoulder? Oh, is gold falling? Okay, gold's at 12.30. Yeah, let it come down to 12.20. So gold's still under pressure. Thanks, guys. So look at the look at the cable, and I know it's if the cable can hold above whatever this is like 141. If we can hold above 141, for the next few days, the risk of a turnaround here, it's there. I mean, you never know what's going to happen. We've got basically another 2 months and change before the referendum vote. You never know. What you never know what politicians are going to do to to try to keep the UK and the EU. You never know. So anyway, I think above 142.30 takes the downside pressure off, though. Okay, let's go to the. Damn, I'm already out of time. Let's go to the Swissy really quick. I spent a lot of time talking about a whole lot of nothing, but that's okay. Look at the Swissy, same as the Euro, same channel, right? Just opposite that we talked about yesterday. Held. 38% retracement, held. Well, close to anyway. Let's get rid of that. Let's see that. Look at the meager, very small little baby bounce that we've had here in the Swissy. And that in itself will tell you that this market is very, very reluctant to go higher. Now I'll tell you, I don't like trading the Swissy on the short side, but if you wanted to short it, it'd be right there. Right there, if you can get it. I don't think that's going to happen today. I'm just saying over the next couple of days. Look, there's Europe is plagued with issues, and the immigrant issue is a big one. Obviously the unfortunate events of yesterday. That's another one. Okay, and people, if they're fearful, they're going to be buying Swiss, and you can see that these small bounces in the dollar Swiss really illustrate the fact that the Swiss is in demand right now. You can go look at the Euro Swiss; it's trading below 109. Okay, the Swiss is in demand, and it's like in stealth mode, in demand. Okay, so just keep that idea on the back burner. 76.70. I know the highs are 76.60, but I'll write down 76.70 is resistance. Support is at, or 76, 97.70, and 97 is support. Right, 97 will be the, oops, channel support. I'm trying to grab the bottom there. So 97, 97.70, tight range. All right. All right, and when I come back, we'll go through the rest. Obviously, I'm taking my time this morning because that's all we got. Time, because there ain't squat happening. Be back in a few moments. Don't go anywhere. All right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar, and we're going to continue on here with our analysis. So let's do that. All right, let's go over to the yen. So the yen. The yen is actually getting close to my cost average. I'm very frustrated with this stupid thing, but I'm just as frustrated with this as probably a lot of you guys are with the stock market, because if you're short the equity markets, or close to short, or thinking about it, it's just the equity markets continue to grind higher, right? So here's like the E-mini futures, and I want to continue to point out this important this important development with the equity markets and the dollar yen. So here's the E-mini futures, right? So if you look at the E-mini futures, very similar ascending wedge. Everybody knows it's an ascending wedge. It's not a secret. I saw more people posting these charts yesterday, so everybody's very well aware. It's kind of scary that everybody's looking at the same thing, but here we are in this ascending wedge. But what most people don't look at is this, which here's the dollar yen, and you can see the massive underperformance of, here's the S&P, here's the dollar yen, and a typically what is a very strong correlation. You guys see that? Okay. What does that mean? Well, what that means is, obviously if the equity markets continue to grind higher, it's going to pull up the dollar yen. But as soon as we're done here, as soon as the equity markets roll over here, the dollar yen is going to probably, gun for 111. So what that means is, if you think that equities are close to their highs, or around their highs, then you got to start looking for a dollar yen short. Now, of course, it's a little frustrating. I'm short very close to here at 112.85, but okay, we are approaching a fib confluence, and here's the dollar yen. Okay, take the 114.50 to the lows. 618 comes in at 113.10. If you take the most recent drop, right, the most recent drop to the lows, let me make sure that's okay. The 786 comes in at 113.14 roughly, okay, on the recent drop. So you got massive confluence above 113. So I'm going to write down resistance for the dollar yen at 113.10. Now, why do I think that could be reached? I'm going to just put an asterisk there. Why do I think it can be reached? Because if we continue to grind higher, if we take stops above 113, if we take the stops above 113, it's going to allow for some stops to get triggered, and then if you want to be on the short side, you just get on the short side as soon as those stops get triggered. Okay. So if you want, my opinion is, you want a good place to be on the short side of the dollar yen, you can get a better price than me. Look for a short up here, 113.10, if you can get it. Okay. Support for the dollar yen. All these channels are exactly the same, aren't they? Here, I bet it looks more like this. Maybe not. Hold on. Stand by. Hold on, before I do that, let's grab this one. Okay. See, that's low, low, low. Let me remove this one. It's not as clean. I don't. It's accelerating a little bit more light than the Swissy. So anyway, support. It's right here. Where'd this line come from? Why is that there? Why is this here? I'm just going to remove some of this stuff because I don't even know why it's there. Let's get rid of that. That was holding us up as resistance yesterday. This is support, this red line. I don't know why it's there, though. Let's figure it out. Oh, okay. That. Got it. I know. That was really key resistance on the way up. Knocked our head against it at 112.20. Finally broke above that. 112.20, that is going to be support. As long as we're above 112.20, we're supported right now. Okay. Let's take a look at the Canadian. So the Canadian, you know, again, this is all about crude, in my opinion. I went through this earlier, but you guys were, you know, probably asleep at the wheel, or you weren't here yet. So let's go over to, before I talk about the Canadian, if you guys want to know why I'm on the long side of the dollar Canadian, it's right here. Whoops, K6. Okay. On Friday, we hit previous support back from August. Tagged that high. Set up a shooting star. Boom, shooting star. We reversed the next day, but we reversed and then came back up again. But still, I still think that that's a pretty significant reversal. But crude, if or when, and I would think more when, but if we drop below 40.30, which is right here, right? We drop below that, crude's going to come under pressure. Crude comes under pressure, the dollar Canadian should rally. We should, theoretically. Okay, so if you take the dollar Canadian hit that 131 yesterday and it stopped. That was a 38% retracement of this move. Right, 38% retracement. We spiked above there on Monday. Came down yesterday. We hit it at 131.10. We pulled back again. So anyway, 131.10 continues to be a really key resistance. If we can climb above that, that probably means crude's coming under pressure. Okay. We are in a bearish trend. I am trading counter trend, by the way, and I think I was clear, but let me make sure I tell you guys again that while we're below this yellow line, I think it's a bearish trend. Okay, to take the pressure off, we have to get back above like 132. You know, basically, I would say 130, probably 132 and change. But we're supported at 130 or ahead of 130. The budget came out yesterday. Didn't move the needle much with the Canadian. So right now 130.20 is support. 131.10 is resistance. It's tight. It's not really doing a whole lot. Okay, support there. Let's go into the Kiwi. All right, so here's your Kiwi. Yesterday, we were here. You know, yesterday we were here, and I said, hey, you know, there's nothing to do with the Kiwi right now. Gets up to 68 cents, probably want to be on the short side. Gets down to 66.70. You know, if you're looking for longs, that's a good place to be long. It's a 618. We came down, to the 618, and we stopped right there at 66.90. So what does that mean? That means that's very important support. You want to be long, you get long here, put your stop below here. I'm very bearish the Kiwi, so that's something I would, I'd rather, stick a 3-inch needle into my eyeball to poke the, frontal lobe of my brain, but in than buy the Kiwi right now. But if those of you that you like that type of self-torture, then perhaps you want to buy the Kiwi here. That was harsh. I don't know if I shouldn't have said that, but anyway, 60. You got the visual, didn't you? You got the visual. You're like, ooh, man, that would hurt. All right. So is resistance. What happens when the market's slow? You start blah 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 about blah blah blah. Nothing in particular. Nothing makes any sense. 68 cents. Are we going to make it all the way up there today? I doubt it. Gold's still under pressure. So I just looked over at some other computers to see what gold's doing. 68 cents. That is resistance. I doubt we're going to get up there today. I think anybody who's long the Kiwi right now is just like, get me the hell out somewhere well before that, because it's just been underperforming. I mean, talk about just, you see the Aussie, and the Aussie is, pushing up and has really pushed up against a lot of resistance. The Kiwi can't get out of its own way. When or if these commodity currencies start losing strength, like if the Canadian rolls over, and the dollar Canadian starts moving back towards 132, 133, 134, you're gonna see, that this Kiwi dollar is gonna get absolutely demolished. It's just to me, it's just a matter of time. The question is, where can you get a short trade off? Like for me, if we can get back to here, I think being on the short side of the Kiwi is probably not a bad idea. But that's still at 68 cents. I mean, and I don't know where looking at it, I don't know where any better resistance is. I mean, spike, and that comes in at 67.85. I just really don't think we get up there. I don't, but I'll write it. And we are in a range. Now, so you want to talk about a difference here? Take a look at the Aussie. I mean, look at how different the Aussie has moved versus the Kiwi. I mean, now the Aussie, just so you all know, see this? See that 618? We stopped. We stopped right on it. Okay, we hit it, reversed yesterday. Damn, I should have taken advantage of that. Yesterday we were here. I drew this out for you guys yesterday. I said, hey, if we can rally back towards remember I said yesterday, if we can rally back towards like 76.50, getting close to that resistance, that's probably going to be a good place to short. Remember that? I drew that out yesterday for you. You want to talk about that? That was matched up. I drew this 24 hours ago. Dude, okay, come on. Somebody's got to give me a pat on the back there. I mean, that was pretty damn good. I mean, that was impressive. I didn't do anything with it, but damn, that was impressive. All right. Yeah, thank you. Jenny, thank you, Stephen. Yeah, Nigel says, consider your back patted. Benedict gave me the golf clap. Thank you. Okay, appreciate it. Thank you very much. Okay, anyway, now think about this though. You're long the Aussie. Okay, just consider this. You're long the Aussie. What you've been watching is, higher highs, higher highs, higher highs, higher highs, higher highs, higher lows, right? Higher lows, higher lows, higher lows. This one basically matched the low. You got to be a little concerned here if you're long the Aussie, because you're thinking, okay, well we really rejected the 618. We failed to make new highs, right? What happens here? If we break this hourly low, If I'm long the Aussie, and I like let's just say if I'm long the Aussie, and I've been holding it long since like, maybe this breakout point when we broke that channel, like at 73 cents. I've been sitting for a couple hundred pip gain. I noticed we're starting to struggle here. Relative strength is diverging as we move higher. I'm now becoming defensive, right? Now you're becoming defensive, and if 75.50 goes, I mean, I'm gonna make some assumption stops are below there. So 76.50, 75.50. I'm gonna actually put an asterisk next to 75.50. 0.7550 and asterisk, and 0.7650 is obviously, if you can get a short up at 76.50, just like yesterday, probably not a bad place to be on the short side. We've been in a bullish trend in the Aussie for a while, actually, for the last couple of weeks. But if I was long, I'd start getting concerned. Notice how the Canadian's starting to firm up here. Dollar Canadian is. Canadian currency is weakening. Kiwi looks vulnerable. I'm actually gonna strongly consider. No, I don't want to do that. I'd rather just stay short the Kiwi and the Aussie through crosses at the moment. But these are getting vulnerable. These are becoming vulnerable here. I mean, you look at crude or gold coming down. Crude may come under a little bit of pressure. You gotta watch these. All right, let's go over to the dollar index. All right, here's the dollar index. A whole lot of nothing. Here's that. Let's go back over to the hourly. This is that channel we drew out yesterday. So we hit the 50% retracement. 618 comes up here. I'm trying to grab this. There we go. Okay. So 96.10 is going to be a resistance because that's the 618 right here. 96.10, 96.11, but you get the picture. 96.10, and support is by the time we get here 95.65. Okay, nothing to really do. Okay, let's go over to the peso. Jenny said silver ran the stops on the downside. Did it? Let's try and, yeah. Okay, I'll come take a look at that here in just a second. Give me just a second. Peso, same as yesterday. 1722, 1760. If we get above 1760, that means the stock market is now is in trouble. So just so you guys know that. I said the same thing yesterday. It's nothing. 1722. If 1760 is breached, you know that risk aversion is starting to heighten. Okay. Let's go over to the Nordic currencies. I mean, the U.S. dollar and Norwegian krona, it stopped me out yesterday on this spike. I was a little irritated that it did that. But take a look at the U.S. dollar and Norwegian krona. Okay, this thing, if you're short, this is probably pretty concerning. Check this out. You might get a false break. See that breakdown? See this, I'm about ready to squeeze it up your butt reversal? Yeah, you got to be careful here because this Kiwi could really put the hurt on some shorts, especially if crude oil rolls over. I would be watching that on the short side, or if you're short. I'm already out, but if you're short, that's where the squeeze could get unruly. I don't think there's a whole lot to do right now. I don't know if there's anything I'd want to do with the Norwegian krona at the moment. It's 50% retracement currently. I don't know if there's anything I'd want to do with it, but just keep an eye on it. Swedish krona. I still have a small U.S. dollar Swedish krona short too. I expect to move back to 832. So 832 is resistance. So you can get a short there. That'd probably be a good place to be on the short side. 8.32. Support is if you can get this. $8.20 support for now. It's minor. But this is significant resistance. Okay. We are still in a range. Big, big, big range. Okay. Let me start taking your questions. Susan, that was a really nice comment. She says, even though I don't trade currencies, listening to you helps me a lot. Thanks for all you give the community. You're welcome, Susan. That was really nice. Thank you.